Hello, everybody. Welcome to our special 60,000 subscriber live stream. I am live here in Bruges, Belgium, in the middle of the Analyzing Finance with Nick European tour. And I was on the road. The channel broke 60,000 subscribers. So I figured I would do a live to celebrate. Let me know how the sound is quality is and how the camera quality is, because I am doing this from my laptop and I'm not doing it with my normal mic and camera setup. So if the quality is not good enough, let me know. But I just kind of wanted to ask you guys on that. And yeah, it's been going well so far. The Amsterdam meetup yesterday was fun. And today I'm here in Belgium, and then I'm going to be in Switzerland for the Zurich meetup on Tuesday, and then in Rome, Italy on Friday. Sunday night out here. So I think in the US right now, it's like late morning, early afternoon. So I can have both the American and European audience watching this. And just how with these AMAs that I do when I hit major milestones for the channel, it's pretty straightforward. You ask a question in the chat, and I'll answer as many of them as I can. If you want to make sure that your live is answered, please leave a super chat. I try to get to all of them, but it sometimes gets a little bit hectic. And yeah, there's not really a theme this time around, because this is kind of a more spontaneous live stream that I decided to do. And usually I start these with pre-scripted questions, but I don't really have any pre-scripted questions from you guys this time around, so I will wait. Why did the algo push you up so fast the last few months? I think I just made content that really resonated with you guys. People like the class stuff. And yeah, I saw that people were watching my really old videos about class when I was a smaller channel out of the blue. And I realized that people wanted to hear more about that. So I made videos, and those are the ones that I think kind of resonated with the audience. I don't think there's some magic secret sauce to the YouTube algorithm. It's more you just make stuff that you want to see, people want to see, and it will be found, assuming it's above a minimum quality. Because I did improve my editing techniques, and I did improve my microphone, and I did improve my camera. And I've noticed when I do have some quality improvements on the channel, the videos do better. Like it's above a floor. It doesn't have to be the best in the world. I don't have to have like a major like Oscar-worthy production, but that I've noticed helps too. Okay. Over time, do you think your opinion on fiscal and economics is becoming more liberal or more conservative? I mean, I think I've always been probably more on the fiscal conservative side in terms of my politics. In terms of free markets and that kind of view, and like limited size of the state. I think I'm from a fourth generation of small business owners. And so growing up with a family of entrepreneurs, it kind of influences how you view the government and how you view inefficient agents in society in general. And the government is generally, for better or for worse, is an inefficient agent in society. So that's kind of my take on that. I don't think it's changed much over the years on that. I mean, I think my views have changed on social issues probably more over time than they have on economic issues. And also what it means to be economically, fiscally conservative has changed over time too. The thing I have changed my view on is tax cuts somewhat. And my view on fiscal austerity versus fiscal profligacy. I generally am for balanced budgets and small functioning of government. I don't like the idea of cutting taxes without cutting spending, and I've gotten more hard on that over the years. That in terms of, and then also, and then there's and everything, and a lot of things are also case by case basis. you have to look at second order effects and additional costs that may not be foreseen from a policy. Maybe like some cutting a government program or might save money, or adding a government program might actually save money. So you have to look at all the second order effects of things. But generally, I've been pretty consistent when it comes to my views on fiscal policy and markets in my life. Would you call MAGA almost communist with them buying stake in U.S. companies? I am actually very disappointed with this whole Intel thing. I don't think it's the government's business to be either bailing out companies if Intel is struggling enough to need a bailout, or because I haven't followed Intel very closely for years. And just as a note, nothing I say in this is investment advice. Please do your own research before making any investment decisions, or contact an advisor who can help you with that. But in terms of I say that before I discuss Intel. But my general view on Intel and the government buying 10% of it, or more like strong holding 10% of it, is that it's just not. I generally don't think it's a good idea for governments to get involved in managing private businesses. Yeah, that's my take. I just think it's not a good. I mean, look at how well Amtrak is run in the United States, for example. Look at Fannie and Freddie and all they've gone through. It also released in the SOEs in a lot of emerging market countries. Like if the government is owning stakes of companies, and GM post 08, that was not really a good idea either. Then it gives the government incentives to favor certain companies and pick winners and losers. And it also probably means the quality of those companies' products and services is likely to decline due to less competitive pressure. And it also pressures the company to be a job center. So Intel's probably going to overhire for political goals to keep employment up in particularly swing congressional districts. But that's my simple take on that. Can the U.S. debt ever be paid back? I mean, it could, if you are actually willing to cut spending and or balance the budget for a decade plus with normal levels of inflation. You don't have to get it down to zero. You just have to get the debt to GDP down to a healthy level, which would probably be like 30 to 60% debt to GDP. If you can get it down to there, then it can be paid back enough that people won't be scared about it. It can happen, but it'll take a lot of fiscal austerity. And Frida, yeah, thank you. It was nice seeing you yesterday in Amsterdam and all of you guys. So thank you for the kind words and endorsing the meetup. So yeah, that's what the next. So that's just my take on the debt. I mean, I'm not as worried about the debt as other people are, because I think the debt has kind of been paid back with inflation in a way. Like when you had this giant increase in the money supply during the pandemic, it kind of washed away in terms of real value of the debt to a certain degree. So the debt to GDP numbers look scary, but the question is inflation higher than the government says it is, which means the real value of that debt isn't as bad, or is the inflation really as low as the government says it is, and then the debt is a problem? There's no inflation. It can't really work both ways. Is de-dollarization really a threat? Not at this point. Watch my video that I did last week about the history of the U.S. dollar from 1971 to 2025, where I went into all of this. And basically, I talk about how there's been every dollar bear market, people are scared that the dollar is going to lose its reserve currency status and be replaced, and there's going to be hyperinflation. This has happened for a lot of times, dollar cycles. And until there's a country that defeats the U.S. directly in war, or somebody creates a harder currency, and I mean harder, like backed by gold or real estate or a physical commodity that people think is more trustworthy than the dollar, because the U.S. dollar is the most trustworthy fiat currency, and I don't see that changing without the U.S. winning a war, then the de-dollarization is not really a threat. But yeah, if some rival country creates a gold-backed currency, then de-dollarization is on the table. But I just don't see that happening right now. What is a currency devaluation? Which is easier to recover from, inflation or currency devaluation? Well, usually those are kind of linked together. A currency devaluation is when your currency falls unilaterally versus all the other major currencies in the world. Usually, if like you have a pegged currency when there's a currency devaluation. So, say for example, when George Soros shorted the pound was pegged to all the other European currencies, and so their devaluation was basically the pound lowering its value because they removed the peg or they shifted the peg to a lower level. In this case, the pound case, they removed the peg. In other countries, they just shifted it to a lower level, and that causes a devaluation. And there can be that's a formal devaluation. An informal devaluation is that you just have your currency going down without just one big gap. It's just a more gradual trend downward of your currency, like dollar bear markets like we've had in the 70s and in the late 80s and in the 2000s. So that would be a devaluation. Inflation is when the consumer price index goes up because there is too much money chasing few goods in the local economy, or there's supply shocks or other factors that are causing inflation to rise. I'm not inflation, so prices to rise. That's inflation. Usually these line up together because a lot of countries import a lot of things, especially the U.S. is a really large net importer, import a lot of goods from other countries. And so weaker dollar inherently is going to mean higher price, especially in the 2000s when the U.S. was the biggest importer of oil in the world and energy as a whole. So when the dollar got weak, oil prices went up, and it did cause prices to rise. It happened in the 70s, and this happened in the 2000s. Whereas now the U.S. is a net energy exporter, and a lot of the U.S. imports are more discretionary and luxury items, especially the bigger ticket ones. It might not have the same correlation as it did in the past. But yeah, they're generally related, but they are different things. Devaluation is relative to other currencies. Inflation is just your overall consumer prices in your home country. Could you explain what happened at the recent Jackson Hole Symposium? Explain Jerome Powell's words for people like yourself. Well, it kind of happened while I was on the road, so I haven't been following it as closely. Even finance people like me take vacations once in a while, but the general gist of what happened in Jackson Hole is basically that Powell showed a willingness to cut interest rates, and that's why the markets reacted the way it has. And so the bond market yields have come down, and the market is a little optimistic because a lot of assets are priced off of the prevailing rate. So if you have a lower risk-free rate, assets generally have higher multiples. It's not a perfect correlation, but especially sectors that are kind of bond substitutes, such as consumer staples and REITs and utilities. But yeah, what do you think Trump trying to put his puppets in the Fed? You think that possibly lowering interest rates by 2 basis points will be damaging? Two basis, they don't do it in 2 basis points. A basis point is 0.01%. The minimum increment they usually lower rates is 25 basis points, and like probably close. And if it's 2 rounds, it's 50 basis points. So that's kind of I think that when it comes to the Fed, I don't think that they will lower rates lower than where they were last cycle. In fact, I think rates are going to finish much higher at their bottom than they were in the previous cycle at 0. So if anybody's hoping that rates can go back to 0, you're out of luck. Like, I don't think 2% and 3% mortgages, for example, in the United States are coming back. However, if there is a recession, I think Powell can bring down rates to as low as 2% on the Fed funds, which would probably mean like a 5% mortgage rate approximately. And the question really is that looking at the back end of the curve, will lowering rates actually fix anything, or will it just accelerate inflation? Because the risk of lowering rates too low is that all that hot money now that needs a place to go is going to scramble, and it's likely going to scramble into real estate, which will drive up housing prices and rents. And since housing is 41% of the CPI basket, it's going to cause inflation to go up. That is the main risk of lowering rates. And I generally been supportive of Powell. I think he was too late. I think he was too late to raise rates post pandemic, but the fact that he's kept them up at these levels for as long as he has is a sign that was probably why we didn't get the 70s repeat scenario. And you just need to wait. Like if the economy breaks and we do see recessionary indicators, and there are some, that's what makes this a difficult job for the Fed. And I also think that's why the Fed has kind of pivoted a little bit. It's not just Trump making demands and they're buckling. I think there's actually real economic signs that cutting rates might be justified here. So that's what I think is the bigger driver of this. But in terms of Trump trying to put his own people in the Fed prematurely, I think it's fine if he waits till their contract runs out or their term expires, but firing people early without like a viable cause, I think sets a bad precedent that can be abused by future leaders and kind of discredit a lot of our institutions and checks and balances in this country. So yeah, I don't like the premature firings of Fed officials, even if I ideologically maybe agree with what his replacements would be. It still sets a bad precedent. How can I be old money? You got to either be born into old money or marry into old money. You can't just be old. You can't make yourself old money. You can make yourself new money by starting a successful business, but you can't make yourself old money. Has the counter elite been co-opted by the system? No, if anything, it's the other way around. The counter elite is in the process of co-opting the system and throwing out the old establishment elite. I might go into more in that in a future video where I explain like how the counter elite works. But that's my general take. Do you like Trumponomics? Depends. What do you define as Trumponomics? To be quite honest, I think there's some good things that the administration is doing with the economy, and I think there are some bad things that the administration is doing with the economy. I like to do it on a piece by piece type basis. I look at a policy and policy type basis. Like, I think there's some good things and there are some bad things. And watch my video I did about the OBBA, where I broke down the Big Beautiful Bill Act, and I told you, I explained what's in it from a fairly objective perspective and what are, I think, some good consequences potentially and what are some bad consequences. Hi, I'm in Germany. Will there be meetups in Europe? Yeah, I just did one in Amsterdam yesterday, and there's going to be one in Zurich on Tuesday, and there's going to be one in Rome on Friday. So probably since you're in Germany, Zurich is probably the closest one for you. The next time I come to Europe is likely going to be 2027. So if you want to see me in person here in the next 2 years, now is your chance. I have other international plans for 2026, which will be mainly Australia. So Australian people who meetups will happen in 2026 in February if you want to see me down under. Let's see. What was I going to say? What was the next question I was going to read? With the major central banks experimenting with new tools like digital currencies and crypto reserves, how might that shift traditional monetary policy toolkit over the next decade? I don't really see many central banks embracing cryptocurrency. But if they did, I think crypto would be viewed like another foreign exchange reserve. And if a country has a rapidly weakening currency, and the central bank needs to defend its currency from depreciation, then what's it called? Then they will sell their crypto to help shore up their local currency. I mean, if crypto does get involved in the system, I think it'll be treated like any other foreign reserve currency. Like not the reserve currency of the dollar, but any like other foreign exchange reserve is the right term. And then the other thing I would say in terms of CBDC, it really depends on the country. Certain countries are going to embrace it and certain countries are not. But in general, we already have a digital payment system. Like the only way that CBDC is going to really mean anything or have any teeth is if it includes a cash ban. And I think outside of like a few Northern European countries, I don't see a cash ban coming in the foreseeable future, especially in the United States of America. Do you think the S&P 500 is too speculative due to AI? Do you believe there's a bubble or something? I'm not going to get into my specific views on investments because just the nature of what I do professionally. And if you want those kind of things, feel free to reach out to me directly and schedule a consultation if you want questions about investments. But in terms of the S&P risk, there is a lot of risk because of concentration. Like over 35%, I think, of the S&P 500 and over half the NASDAQ is concentrated in like the top 7 to 10 companies, which are mostly in the technology sector. And a lot of them have multiples driven up due to AI enthusiasm. That is a risk. I'm not going to deny that's a risk, but I'm not going to really say any more than that. Let's see. What's the next question I was going to say? How are the talks in Europe going? Oh, I've only had one so far in Amsterdam, and that went well. I'm looking forward to the other two that are coming in Zurich and in Rome. And I'm just loading them up right now. I'm going to share the links in this live stream if you want to join me while I'm here in Europe. I'm going to Rome particularly for Catholic Jubilee. And like if you are a Catholic watching this, it's kind of a once in every 25-year thing where they tear down like one of the walls in the Vatican and have other special masses and ceremonies and pilgrimage type activities. And I recommend going if it's because the next time it's going to happen is not till 2050 when many of us watching this are going to be senior citizens. Hi, Nick. How are you? I'm doing well. Thanks for asking. And I just posted the link for Zurich, and now I am going to post the link for Rome. And then let's see. Let's see if I missed any other questions. What we mean is, will the US dollar shift from reserve currency being the dirtiest shirt in the basket? Also, didn't the British lose reserve status via debt? Well, they already are they're the cleanest dirty shirt, really, is kind of what PIMCO used to coin it as. But yeah, if they're the dirtiest shirt in the basket, that means they are losing their reserve currency status. So I've already kind of answered that. And the British lost their reserve status through, they didn't necessarily lose the war in terms of being on the wrong side, but they effectively had to sacrifice their empire and all of their reserves to hold off Germany in the two world wars. And that basically bankrupted Britain. And then after the war, they had not enough fatigue. The country had a lot of fatigue and didn't want to preserve its geopolitical might, so they voted in Clement Attlee, who prioritized instituting a welfare state over preserving the empire and its relative geopolitical power, and the pound was gone. I mean, it would have been gone anyway because they lost all their gold reserves to the U.S. during the Lend-Lease program. But yeah, that's kind of how it happened. What do I invest in? I'm not going to really talk about that because what I invest in is basically what I would do for my clients. What advice? The Zurich meetup is at 6 p.m. CEST. What advice do you give to people struggling to get employed? Well, it depends what your field is and what your expertise is. That's kind of a very specific question. If you had to bet who wins the U.S. Open, in tennis or golf, I'm not watching golf, so maybe the U.S. Open already happened there. So yeah, it's probably is tennis. I haven't really watching that much tennis. Djokovic is historically one of the best, but he's kind of getting old now. Sinner is pretty good, and that guy from Spain who's in his early 20s. But I don't really follow tennis that closely as a spectator. I'm more of a guy who likes to play tennis than watch tennis. So I have no idea. I'd like to go, if I had to go to a tennis tournament, though, I would actually prefer to go to either Wimbledon or the French Open over either the Australian Open or the U.S. Open. So that I think those would be more fun. I think the surfaces are kind of more unique than hard court, which is what I typically play on when I play tennis. And it'd be a good excuse to go hang out in London or Paris for a week. Which state are you from? I'm from California. So, yeah. Do you think welfare states like Germany can last, or will it crash? I think that it is. I think they're likely to have to be restructured, and that restructuring will be perceived as a crash because there'll be a lot of people who are expecting certain promises in their retirement or in their cradle to grave setup that they are not going to get. Or if they don't do that, they'll crash in real terms through inflation. Like your $2,000 a month Social Security check will only buy what like $1,000 buys you today. What is your biggest takeaway from your college experience? I think that my biggest takeaway from my college experience is that college is the best time to really contemplate and figure out what you want to do with your life. And it's also the best time to try certain things that you're not going to have access to in your older age. Like I learned a lot of new hobbies that I tried for the first time while I was in college. I learned about a lot of different industries like that I could have potentially worked in. I studied a lot of things that I wouldn't really have had the time to do any other stage of my life. Like I didn't realize what I want to do for a profession until I went to college. I didn't realize it was a viable path to what I do now until I worked under somebody who did it when I was in college as like an intern. I tried a lot of hobbies that I would have never probably had the time to pick up otherwise, such as surfing and fencing. I learned while I was in college. Creative writing, I learned in college too. And I did my first podcasts in college. So yeah, there's a lot of things that, and I met a lot of good friends from my time in college as well. So overall, I have a lot of positive. Those are 3 good years of my life. Let's see, Excel or Google Sheets. I use both. So yeah, I that's the answer. What are your thoughts on using AI to help with finances? What do you mean? You're asking AI to be your financial advisor and build you a financial plan? Is that what you're asking? Like, I've never really tried to do that the thing is AI, it's going to be hard for them to completely understand your situation. I don't really know what AI recommends people on that. And I don't really know how a hallucination would mess that up. But I generally think that a lot of issues with financial planning are more emotional and psychological in nature. And that might be the limitation of fully automating financial planning. And I think it is. Do you have any advice on one studying economics and finance? Yeah, you should explore all the possible career outlets within finance because finance is a very big umbrella. Finance is like as high as 20% of GDP in the United States. So it can mean a lot of different things. It can mean insurance. It can mean real estate. It can mean investment banking. It can mean commercial banking. It can mean equipment leasing or lending. It can mean investment management. It could be private banking and private wealth management, which is more of a customer facing thing. It can mean sales. It can be institutional trading. Like there are so many different things in the world that are broadly categorized as finance. You got to make sure you're in the right corner of it. A lot of people will naturally kind of sway towards investment banking because it pays the highest out of school and it provides a lot of exit opportunities. But that's not oftentimes that the best thing actually is for somebody in terms of their aptitude and longer term career interests. You want to make sure you're doing something that you're not going to burn out within 10 years, because it's very common for people who go into finance to chase the money to burn out within 5 to 10 years. I've seen it a lot with friends and family members. So that's kind of my answer to your question. Let's see. I'm going to scroll up to see if I have any other questions here. Why is my social circle seeing a lot of women drop out of the workforce to be stay-at-home moms? Well, I'm actually going to do a video about this that kind of discusses at what income does somebody need to make for it to make sense to work instead of being a stay-at-home parent. I try to look at it from a more gender-neutral perspective, in the sense that there are certain households where the wife is going to be the more productive person in terms of career. But in general, the case, like since most of the audience is men on this channel, it's a stay-at-home wife type dilemma. But it really depends on what tax bracket the breadwinner is in, and then what is the maximum earning potential of the non-working spouse, and how many kids there are in the picture. So maybe people are just doing the math because of high daycare costs, high progressive tax rates, and burnout professionally. A lot of people are increasing, especially Gen Zs, and their quiet quitting trend, that a lot of them are burning out of their careers even faster than millennials did. I think as a combination of those three is probably why you're seeing that happen. But I'm not going to go into the specific numbers on here because I have that for a future video. But I think if it's a generational difference, I think it's just the economics are changing. And I think especially in a place like here in Europe, where the country I'm in right now, Belgium, if you make more than say like 45,000 euro a year, you're paying your marginal tax rate's like 50%. So in a country, I think in Europe, it probably makes even more sense for having a stay-at-home spouse, because your marginal dollar just isn't nearly after-tax dollar isn't really nearly as valuable from working. And I think it's in general why I think a big driver of why hours are here so low. Like when I was traveling in the Netherlands and in Switzerland, I was surprised how early things like grocery stores and a lot of restaurants close or have limited hours. And I think the reason is a combination of high labor costs and the fact that high marginal tax rates means that people are more interested in being productive with the limited hours they do work versus trying to add more. So, yeah. Do you like The Economist or another journal, like a newspaper? Like, I mean, I like generally like the Wall Street Journal and the Financial Times. I don't really like The Economist. I think they kind of have a center-left bias and a overly establishmentarian bias, which kind of clouds a lot of what they do. I used to like it a lot more, like pre-2015, and then it kind of went off the rails. It's similar with what happened to The Atlantic. I used to read that quite a bit too, and they kind of went off the rails about 10 years ago as well, unfortunately. But yeah, in terms of like mainstream economic, and then mainstream media, it's probably the Journal and the Financial Times. Bloomberg cannot be bad either, but but yeah, I don't really. And then I just have various sources from other means that I try to get a lot of information. I think you get a lot of information just from financial data, really. Like if something is going on that really matters, it moves the stock price or the bond price or the currency of the most affected financial asset related to that news story. If it doesn't, then it's not a big deal. I look very Euro today. How do I look Euro today? Is it the Lacoste shirt or is there something else to it? You should be at Burning Man. Yeah, I'm not. I get the joke from the last live stream, but yeah, Burning Man is not my thing. Yeah, it's Lacoste shirts. That's something I've liked for a long time. I've worn them since high school. I just they're just probably one of my favorite polo companies, shirt companies. Um, yeah, and then with old money shirt. But what was I going to say? Let's see what the next question is that I have. What tools can governments and regulators use to reduce over financialization? Um, yeah, I mean, that is a good question. First of all, is over financialization always a bad thing? Like, I think that's kind of, I think the main thing you can do is you need to have regulations that reduce or outright eliminate moral hazard. If you don't have economic incentives for bad behavior, then a lot of the over financialization problems will be kept in check by prudent risk management within the banking system and the capital markets. Like people feel more comfortable to take excessive risk when it doesn't feel like there's any way they can lose. I think the other thing you can do is you can have keep rates above a certain level and don't have negative real interest rates because negative real interest rates encourage people to move too far on the risk curve and or kind of um, be a little looser with the rules to get that extra yield that they need to meet their income obligations. So I would say the combination of having a skew towards tight monetary policy and have policies that reduce moral hazard because that's the main problem. That was the main problem of '08 was that like there was no punishment for people to speculate on a house in certain law states in the US. And if they didn't and the house went down, they could just turn in the keys. Um, and there was and since a lot of the banks sold their mortgages to companies who made asset-backed and mortgage-backed securities, then they didn't really have incentives to vet properly the creditors that they actually pay back their loans because they're not keeping the loan on their balance sheet. So you got to just make sure that there's no that the incentive structures are correct. I don't think financialization is a problem in its own end. So is China communist or capitalist? Well, in the CCP is nominally communist. That's what it stands for. But in practice, it's more of an authoritarian capitalist state. Like they have markets in their economy, but they all kind of have to run through the government wants and the government's bigger plan. If they don't like what you're doing, they will put you in your place. So that's how I would say it. But if they don't care what you're doing, then it's a fairly free market. How does one explain the fact that countries with the lowest work hours per week are generally the richest and the ones with the highest are the poorest? Things Germany with versus other countries. Well, I don't think that's entirely true because the United States has higher hours and is richer. So that's kind of one big exception. And I don't really know where Switzerland ranks on that or Norway. But and I know like some of the countries that I think a lot of the thing is also what defines an hour of work. How's that counted? Do some countries probably count lunch breaks for their hours? Or what do people, how many, and how productive? I think this is a cultural thing. Like if some countries, like probably Germans, when they're working, are actually working, whereas other cultures, they might be on social media or just chatting at the water cooler. So it's very difficult. It defines. So I know it's also technology, like which countries are the best at utilizing automation, and that could be a sign. And also age. Like if you have an older country, you're going to have lower average work hours because you have a lot of people retired or semi-retired. And then people are going, and also richer countries tend to be educated longer, so you have more working age people in school, I think. But they might not count as in the labor force, but there might be part-time people who are going to school. But in general, yeah, that's kind of it. I think it's just the problem is like it's the same with the purchase power parity problem. It's hard what's measured. Like it's a measurement problem. So I don't really make any interpretation based on what the official published hours are. You have to kind of see it based on like other things, like maybe like official vacation time or paid vacation time might be a better metric, or like or things like that. Are you familiar with Max Weber's thesis on the Protestant work ethic? Yeah, and I generally don't agree with it. I don't think toil or work for its own sake is worthwhile. I do think hard work is worthwhile, actually, though. And I think a lot of Gen Zers and a lot of the doomers on this platform advocate that there's no point in trying because housing costs are too high or whatever economic issue is du jour. But I think as long as there's a greater purpose for your work and something you need to do, like whether it makes you satisfied from a personal level, whether you're doing a greater good for society, or whether it's going to lead you to move up to your next stage of your career, or you're building a business or something like that. Yeah, I am all for hard work, but it needs to be hard work with an end goal in mind. It's just hard work and toil for the sake of it is where I disagree with Weber. Have you looked into historical economics like Athens, Rome, or the Middle Ages? Yeah, I've read a lot about those kind of things. I don't know if they would make good videos because they'd be pretty short. The other thing tricky with those is that if I have like an academic research team to help me with this, it's hard to get good data. Like I know generally how the business models were for the Roman economy and the European economies in medieval times and the Islamic economies during medieval times in ancient China. I'm not as familiar with how Greek and Indian economies worked back then, but it would be very speculative in a lot of ways. And I don't think it would really be the best video at this point, just due to the lack of data out there on this subject, but I might make it in the future. There's just a lot of other things in the pipeline before that. How do professional licenses like a CPA or CFP improve earning potential and career advancement? Well, they're a credibility boost. I did a video about designations a while ago where I broke down all the major financial designations and what they mean. And I think that they're kind of just like a proof of expertise in a way. It's kind of like an alternative to an MBA, but in your little specific field. And I think they can be valuable as long as you stay in the career that professional designation is for. Like if you get a CPA and decide to be an attorney that's not related to tax or business contracts, it's probably not going to be very useful for you. However, like if you stay in your lane of what you got the designation for, I think they can help, and their costs are low enough that they're still worthwhile. Let's see. Where can I find a copy of that Orange County Ink book? I mean, I get asked that on every live stream now, and it's out of print. I've tried to go to the website where I bought it, and it's down. And as I think it's made through the OC Business Journal, so maybe reach out to them with the help of the OC Business Journal. And the OC Business Journal is still a active magazine in the community, but it's a great book, and all my friends want to lend it from me and borrow it from me. So it's a popular book apparently, and I get asked about it all the time. But Orange County, for those who are not familiar with, is like a great example of like entrepreneurship at work. A lot of great companies were built in Orange County, California. Yes, and like it goes in the profile. A lot of these entrepreneurs, they may not be as famous as like the Bill Gateses or the Steve Jobs or the John Rockefellers of the world, but they still create major publicly traded or privately held companies that you probably know who they are, and they turned basically a land of orange groves into probably the most. What's your favorite golf course in SoCal? I think number one has to be Pelican Hill in Coast. It's very expensive, so I haven't played there much. But the times I played there, it's great. Like ocean view on half of the holes. They're challenging enough to be fun, but they're not PGA level frustratingly challenging. So you can still have a good time if you're an average golfer. And yeah, it's just got good vibes. Second one I like a lot is Sandpiper in Santa Barbara. It's fairly flat. It's not too hilly. So it's nice for somebody who doesn't have a super long drives or power shots, but like, and like you don't have to worry about hitting off a slope. And it's got great views of the ocean too, right next to Santa Barbara. And it's just a fun course. I really like Sandpiper. And then the third one is Monarch Beach Golf Links in Dana Point, California, which is, they only have 2 holes that are on the ocean, but it's still, again, it's like enough difficulty to be interesting, but not too oppressively hard that if you're not a super great golfer, that you will be frustrated and hate yourself. And they have a really good tri-tip sandwich in their like little place to pick up food on the 9th hole. Yeah. So I like Monarch. So those are probably my 3 favorite golf courses in Southern California. I haven't played at any of the country clubs in Los Angeles. I played at some of them in Orange County, but so I'm not familiar with like LACC or Brentwood or anything like that. So those might be great golf courses too. And I have only played 1 golf course in the Palm Desert area, and I played, unfortunately, in the summer. So it was, by the time I got to the 11th hole, I started early. It was too hot. But yeah, sorry if I'm ranting a little bit about golf, but those are the golf courses in SoCal. Are demographics destiny? I think they used to be. No, now I don't think they are anymore. I think the thing is that technological change is destiny. I think technological change kind of leads economic change, which economic forces drive cultural forces, which drive demographics. So I think it's kind of the demographics, I think, are like a third order effect. I think technology and economics really what and cause destiny. Like I think that the birth rate stuff, a lot of it is self-correcting. If you want to know more of my thoughts on that, I think you should talk about watch my videos I did with Malcolm Collins, because I debated him about this very topic. Yeah, Donald Bren did have a very interesting story, and I think he is in the Orange County Inc. book. Do you use your firm invest in any infrastructure funds? Not yet. It's something I've considered, but not at the moment. Salt Creek Laguna, those surf spots are localized. Everybody knows it. I grew up around there. Yeah, Salt Creek is a good beach. I've never surfed there before, but it's a nice beach. Let's see. Is migration a win or a loss? What do you mean? Like, is countries accepting large amount of immigrants a win or a loss, or is for an individual personally to migrate to another country a win or a loss? Or the third one, is a country encouraging mass emigration a win or a loss? Because those are all very different questions. I want to make sure I answer the right one. Does economics dictate art? Are economic conditions the reason we're out of good films? I think it's sort of a certain degree, but I think technology is also a big driver for art. I think that the golden age of art was killed by photography. Like when you had photography become mainstream and accessible, particularly color photography, it kind of heavily reduced the need for conventional artwork. Like a lot of art was patronized by wealthy families who wanted family portraits or scenery of places that they've been to or even never seen, but they couldn't get a picture of it. And so then you could get what's it called? A picture. Nowadays, it kind of makes paintings less valuable, and that's why I think the quality has gone down, because people have to be more controversial, more avant-garde, more shocking to get attention. Because like a nice painting of a cathedral here in Belgium is not going to stand out when you could take a photo of it. So, um, yeah, that's my take on art. And I think with movies, I think that the reason that movies have declined in quality to a certain degree is economic pressure and globalization. You need to cater to a market that may not understand the cultural um, quirks of your local country. So by homogenizing it for the global culture, it might make it hard to make a movie that resonates really well with any one particular culture. Um, I also think that the economics of movies, it's a heavily unionized industry and just costs are going up, that like bigger budgets require being less creative because you can't really afford to take creative risk. So I think that might have something to do with it. And then there's things like video games and YouTube and other content channels and the golden age of TV, which was in the 2010s, kind of brought a lot of competition to movies. And so you had a lot more entertainment dollars going away from movies in the conventional sense, more to things like video games and social media. So there's a lot of variables that I think can drive it. When am I heading to Dubai? Um, I don't have a big enough of an audience. When the audience is big enough that would want me to come speak there, I think I'll go. But I'm not there yet. Uh, that's my answer to that question. Uh, have you thought about building your channel with intent to sell it? No. I mean, I never really intend to build this channel to sell it. One, it would be very difficult to sell because it's me. So, like, the whole point would be selling it is if I could get it for a price so high that I could retire and not have to do anything anymore. And what's going to happen to analyzing finance with Nick without Nick? What would be analyzing finance with Bob or Steve or Jennifer? um, I it just wouldn't be the same. Um, so like that's my that's one thing. Second, I mean, I probably, let's just say my other business took off a lot, that like I don't think it would change anything because I didn't originally make this channel for the sake of a business. Like I like talking about this kind of stuff, and this is my platform to share my ideas. So yeah, like if I wanted to create a channel to sell it, I would do much different type of content. Like if you want to make a channel to sell it, you got to make it faceless. Honestly, am I a Marxist? I'm definitely not a Marxist. I mean, is there anything on my channel that would make you think I was a Marxist? I mean, that's the thing that I think what makes this channel unique is I could acknowledge things that class exist without being a Marxist. Am I sitting in confessional? No, I'm just in my hotel. What do you think of the future of Riverside? I'm honestly not that. Well, it depends. As long as California's political environment stays the way it is now, I'm not very optimistic on Riverside. If, let's just say, California became more friendly to manufacturing, and the onshoring really came in full steam, I think that Riverside would be where a lot of factories would be built, and that the Inland Empire, that stuff manufactured in the Inland Empire would be exported through the ports in Long Beach and LA. But unless if California becomes a more manufacturing hub and has policies that encourage bringing domestic manufacturing to California, I don't see it happening really at this point. It's hard to be optimistic on Riverside without major reforms, but I think manufacturing and industrial is the way for a brighter future for Riverside. Am I an anarcho-capitalist? No, I'm not really anarcho-capitalist either. I have a lot of, I mean, I've had a lot of arguments with friends of mine who are anarcho-capitalists, but I think the fundamental issue with anarcho-capitalism, which I talked about in the iceberg economics, is that you need a monopoly on security, like in the sense of a state level, because one, if you're the only anarcho-capitalist country, you will just get invaded. And second, if the whole world was ANCAP, the insurance companies, who would be the ones theoretically providing security and defense, would just consolidate and monopolize until they become a de facto government. Do you think there are valid Marxist critiques of capitalism? If so, which ones? I mean, I'd have to think about what critiques of capitalism are specifically Marxist versus not. But yeah, I mean, so that might make a good video idea. I mean, I think the main real issue that people have with capitalism is uneven distribution, which I don't really think is as much of a problem as maybe some other people do. But the terms of like the critics, the Marxist critiques, I'd have to get back to you on that. I know I have a good answer. It's just not coming to the top of my head. I'm sorry. How do you deal with clients asking dumb questions or wanting to make bad investments? I mean, generally with my business, we are the ones who are making those calls. If a client wants to make a bad investment, it's their choice. They have a right to do it. I'm going to tell them it's a bad idea and explain why. And yeah, that's I mean, I try to talk them out of it, but if they don't want to listen, it's their right to make their choices. Let's see. Do you think about personal data farming? People complain about invasion of privacy, but if the data can increase spending, that isn't that good for GDP? Well, I mean, that's the idea is a number go up thesis to a certain degree. That GDP is GDP growth is always a good thing. I did a video about this called "Is Everything Commoditized by an App or Buying the Village?" It's the idea that like because people live more atomized, lonely lives, you have as a result people paying for stuff that used to be done freely within their families. Like example, instead of having your parents or your friend take you to the airport, or you use an Uber, or instead of walking your dog, you hire an app called Wag to walk your dog for you, or like instead of like talking to your friends, you use BetterHelp or ChatGPT. So like those are technically GDP boosters, but is society actually better off? So that's the same thing in personal data collection. Personal data collection might grow GDP, but is it actually making society better off? And that's really what we should be measuring. It's difficult to do that quantitatively, but that is kind of my point on that. What is the minimum client buy-in to retain services for your wealth management firm? Well, it really depends on a lot of things. Like I try to base it on certain variables, like mainly age and level of contribution. Like somebody who is younger, say like 45 and under, who may not hit my minimum asset requirements, but is saving a large amount of money and they're able to do it consistently, I will take on that client even with a much lower minimum. Whereas it's somebody who's drawing from their assets or not contributing, I have a much higher minimum. So it's complicated. But generally, our minimums for people who aren't rapidly saving are about 500,000 USD for Americans and $1 million USD for overseas. But again, those aren't hard numbers. They're flexible depending on people's situations. So I put a link to my consultation form if you want to learn more about specifically what I do on the wealth management side. Yeah. Why is Gen Z spending less, especially on wants? It seems like personal data collection. Well, the reason why they're spending less is because they have a few reasons. One, Gen Z are younger and so often have lower incomes. So is that age adjusted? That's my first question, because I'm not sure if Gen Z is spending less on an age adjusted basis. And second, Gen Z are better savers. I did a video about why Gen Z is the most materialist generation. And you've got and I think in the sense, not necessarily they want to be conspicuous consumers. It's more the fact that they prioritize physical things and have a shorter time preference for money and want to actually accumulate wealth versus experiences. Like a lot of millennials are more quixotic, more idealistic but not practical, whereas Gen Zs are a lot more financially practical. And I think they have much higher. I don't know if they have the hard data on this, but I just know from survey data and just my own intuition and experience dealing with Gen Z is that they have much higher savings rates than millennials, Xers, and boomers did at the same age. And so, yeah, they save a lot. And I don't think that's a bad thing. So, yeah, that might explain it. How will Taylor Swift's engagement affect the economy? Not much in a material way. I think that celebrities, especially in the age of the internet, where the whole influencer economy is very diffuse, I think what an individual celebrity doesn't matter. Like, some people think that Taylor Swift getting engaged means that a bunch of people are going to get married faster, and it's going to encourage women to want to get married. But then I've heard the other side that she waited till she was 35 to get engaged, that it'll make women think they have all the time in the world to find somebody. So who knows? There's a lot of contradictory information on that. Are we in an AI bubble? I mean, it depends. I mean, it's what do you mean by in terms of like the AI stocks? I'm not going to go into really specific investments, but there are some parallels to what's going on now with AI and the internet in the late 90s. So I think that the main risk is that not that AI isn't real or fad. It's a real technology. It's a real game changer. And I'm very bullish on that long term. It's just a matter of, are people overestimating what it can do in the short term? And that's really where the debate is. Do we live in a gilded age, or are we getting close to that in the future? I think we might have the closest time, probably the gilded age. The modern time would probably be the 2010s or the 1920s. I think now anything in quality might be going down to a certain degree on an absolute basis, but especially on a global basis. But it's not. I don't really think it's the same, because I think there's these because there's a lot more opportunities for advancement. Like a lot of the technology and deregulation for entrepreneurship in countries like the US is providing a lot of people to move up. And the venture capital market, being as deep as it is, also is providing opportunities for people to move up if they don't have the money to self-finance something. So yeah, I think the difference is just the Gilded Age. They literally had hard monopolies for hard physical commodities. I mean, big tech do have dominant controls in certain sub niches of tech, but it's just not the same as the Gilded Age. Thoughts on comparing the modern state of affairs to the fall of ancient Rome? I don't think that's appropriate. Honestly, I don't think if we're going to use the U.S. to Rome, we're not in 476 AD. We're probably in like 70 to 40 BC, like pre-Caesar, like Marius, Gracchi brother, Sulla. We're kind of in that time frame, if you know your Roman history. No, that's kind of my bet. Let's see. Are you hitting or standing on 17? I haven't played blackjack in a long time, so I'd have to think about it. Belgium is introducing a capital gain tax in 2026. Should we leave the country for Luxembourg, for example? I mean, unrealized capital gains tax or just a normal capital gains? Because I thought they already have a regular capital gains tax, if I'm wrong on that. And I think Belgium already has some of the highest, most punitive income taxes in Europe. So, normal? They didn't have one before? That's surprising. I mean, if you have a lot of stock or you're planning on selling a bunch of real estate or any other assets that's appreciated a lot, then you need to talk to a tax advisor and see what your options are moving to another country. I'm not really a tax advisor, particularly on a country that I do not live in personally. Um, but yeah, that's kind of my take on that. But yeah, it's if you want more specific details, reach out to me directly. Um, let's see. Or am I religious? Yeah, I am a practicing Roman Catholic. Are you sitting on the toilet? No, I am not. Let's see. Let's see. I think I missed any questions here. What could be some metrics used to be general utility, life, and happiness as alternative to GDP? You can look at median wages. Um, that might be a good one. I don't like household income because household can mean a lot of different things. It can mean a person living alone. It can mean a married couple with kids. That can mean a cohabitating couple with no kids. That can mean roommates. So I think median individual incomes, I would say, or just like wages priced in gold, if you want to take a more inflationary kind of view on it, might be a good proxy. I don't really, the problem is like using measures of happiness is that happiness itself is very subjective. Like, what does happiness mean? Or maybe the percentage of people who have a certain like technology that people universally believe is a good thing to have. Like, I don't know, the percentage of people who have washing machines in their house, or the percentage of people who have like smartphones. But there's got to be something that is economically relatively prohibitive, but is something that people take for granted or materially affects happiness. Or maybe life expectancy would be another one. I think if I wanted to try and measure like quality of life, the trend in life expectancy is probably a somewhat of a good metric for that. Or the quality of life expectancy within, say, the top 50% of the population. I think could be a good proxy as well. Um, how can corporations don't, how can corporate lobby vote separately? Given the individual working their vote separate, doesn't that count as double voting? Well, corporations don't vote in elections. It's the same with labor unions or any other organization like AARP or any other active like NGO that lobbies the government. The organization doesn't vote. People vote. So I don't really understand what your question really is there. How can we reverse the spike in deaths of despair? You need to give people a sense of hope, and that can be done through two ways. One, you can restructure the economy in a way that drives real wages higher and standard of living higher. I think that deflation is the most likely way to do that. I don't think you can just by fiat make higher minimum wages or raise the wage scale without an inflationary consequence. So I think that that's kind of my take on that. The other thing is a spiritual issue. Like, I think a lot of deaths of despair are caused by people having lack of meaning and lack of God in their life. And I think that you probably need some sort of re-Christianization in a lot of, or the West, if you want to reduce deaths of despair. And having closer family ties, that's the other driver. Like, if people are closer to their families, they're less likely to have depression because they have a strong support system. Not everybody's fortunate to come from a good family, I know that, but for those who do have like a reasonably good family, strengthening family ties, I think, can help with reducing deaths of despair and having maybe policies that urge extended families to live in the same cities or metropolitan areas. I don't really know how you would incentivize that kind of behavior, but I think that could help. What's your favorite city to visit in the Western US? Okay, so I have to exclude California because I live there. So I don't really count going somewhere within California really as visiting. So, um, yeah, then when it comes, so I'd say outside of California, I mean, I like Hawaii. That's probably my favorite place to visit in the Western US. Um, Either Maui or Kauai. But if I had to be on the mainland Western US, excluding California, um, I don't know. It's probably either Bozeman, Montana, or Scottsdale, Arizona. Both those places are pretty nice. Um, Seattle is also fun for a short weekend. And then within California, San Diego. Um, all right, let's see. Have we ever had a purely capitalist economy, or has it always been mixed to a degree? I mean, the closest we add to a purely capitalist economy would be like the frontier states of the United States of America um, in the 19th century. I think that was pretty close, and those grew very rapidly, probably as a result. But there was also other issues. That's why it's called the Wild West. Uh, but I can't really think of any other civilization that had pure capital. Maybe Victorian England to a certain degree was, but they even had a lot of regulations, like the Corn Laws, for example. So I think the Wild West in the U.S. is probably the closest. Um, let's see. If the dollar loses reserve currency, what do you think the best strategy to preserve wealth is? Convert to Swiss franc, gold? I mean, that's a multifaceted question. I don't really talk about civic investment advice on these live streams. But yeah, I mean, I think that the Swiss franc and gold are pretty good stores of value, but it really depends on your specific situation. They're probably like, that's not what you do to get returns necessarily. And yeah, and speaking of how strong the Swiss franc is, I felt that in real life with my experiences out here in Switzerland. Um, let's see. Thoughts on classical versus pop music? Um, I listen to more EDM personally, or smooth jazz are probably the two genres I probably listen to the most when it comes to music. Um, I think that there's some good classical music. I mean, pop music is kind of indistinguishable. It's kind of like elevator music with vocals at this point. So I don't really have that strong of opinion of any pop music in the last 25 years. Uh, but yeah, the classical music, it depends. Some of it's really nice and relaxing. There's times I just get bored. Um, is it possible to have deflation without sparking a decline in economic growth? Yeah, the whole last quarter of the 19th century, we had a lot of economic growth in the United States with deflation. It is possible, but it's politically painful. So yeah, what is my favorite novel? Yeah, I mean, I'd have to think about that because I don't really read that much fiction really anymore. I stopped reading fiction mostly in college. So, I mean, there's a few that stand out. I like The Old Man and the Sea. I like The Catcher of the Rye. I liked what's it called? The Picture of Dorian Gray. And there's one other like novel that I really like that I don't really remember, but I generally don't read novels. Like if I want fiction, I generally prefer. Oh yeah, John Grisham, The Firm. That was a good one too. If that, so that's one of those four is probably the top. But when it comes to fiction, I prefer consuming fiction through movies and video games. And when it comes to reading, I prefer to educate myself and read nonfiction. Um, yeah. Anything you recommend reading before my studying economics and finance to get me into the vibe, giving me some knowledge? Well, if you're not part of my Substack, if you become a free member of the Substack, I have you'll get on the welcome page, or it might be emailed to you too, where you can download my reading list of the top 100 books related to finance, economics, social class, all of it. So, because I get asked this question all the time, so I've just decided to just have a link that people can download to access that. So, if you want that, just go find my Substack, and all the books are there. Let's see. Thoughts on button-down collars? I don't see anything wrong with them. Thoughts on Peter Navarro? Well, I think he's very hawkish on China, probably too hawkish to a certain degree on China and trade, but like he kind of did point out a lot of security and economic concerns related to the relationship with China that really weren't being addressed before he came on the scene. Will you be interested? Will you ever do a course on wealth management, economics, etc.? Like, what do you mean, like a separate, like, paid video course or something like that? Probably not. I mean, I have made the Iceberg of Wealth Management and the Iceberg of Economics series. You can watch that. I mean, I just feel like if I made a course, it would come off the wrong way to the audience, which is why I've been hesitant to do it. So yeah, that's but I also am busy with my main business, which is running my own wealth management firm. So that's the other kind of issue I have with that. If you had the holy grail trading strategy, wanted to sell it for a one-time payment to an institution, how much would you ask for? Well, I'd ask enough for that I would never have to work again. I mean, the thing is that even if you have a holy grail trading strategy, the challenge is raising money for it. Like, if you do a small amounts of money, like, unless if it's like thousands of % per year, it's going to be hard to get there. So, I would probably sell it for, I don't know, somewhere between $5 to $10 billion. Enough that I could just not have to worry about money, and not just worry about money, but like that I would not kick myself for not keeping it for myself. That's like, I mean, because that's what some of the greatest hedge fund managers, they got to about that level. And so if I can get to their level without having to build the business and trade for 20 years, why not? All right. Let's see. Do you know why Netherlands GDP went from trillion 17th to 18th century? Well, I mean, there's the tulip mania, which happened then, but they were the ones who really invented a lot of what we take for granted in modern capital markets, such as the stock market, the joint stock corporation, multinationals, such as like the Dutch East India Company. And that's when they built their colonial empire. And yeah, they were just kind of ahead of the game for embracing the market economy and financial innovation. So that's kind of the answer to that question. Yeah, I'm not going to answer specific thoughts on Google stock. Let's see. Thoughts on Martin Shkreli. I have mixed thoughts on Martin Shkreli. Yeah, it's complicated. Do you agree with certain hedge fund managers who have made China uninvestable? Anything is investable at the right price. So I don't really think there's something as uninvestable. There are things that have very high risk, so that price buying may have to be at a ridiculously fire sale valuation. And you might not want to put more than, say, 0.1% of your wealth into it because of that. But there is really, I don't really think there's anything that's truly uninvestable. Unless if you think the expected value is 0, then I guess then it is uninvestable. But like, yeah. Thoughts on Frederick Jackson? I think you meant, are you Frederick Johnson? Or are you talking about Frederick Jackson Turner? because Frederick Jackson Turner's the frontier thesis. I think it has some validity to it. I think America's culture was built on this idea of a frontier, and the frontier is what allowed social stability and wages to remain relatively high because the cities, the east, and didn't get too crowded. But then once the frontier filled up, it did cause the old model of American growth to stagnate, and that's why the early 20th century was a little bit of a struggle for America. But there are new frontiers being created. I mean, the technological frontier is what we have now, and whether that's the digital world or the physical world, which might be making a comeback, like the whole advent of robotics technology right now might be the advent of the revival of kind of like how the 50s and 60s was like the jet age in a way, where you had a lot of more modern electronic technology being developed in the 50s and 60s. And we might have a new version of that starting with the robotics revolution and AI and all that kind of thing. So yeah, I think, and then eventually space is going to be the frontier, but we're far away from that. But in terms of, so I think that his thesis was generally correct, but there's also new frontiers. What are your thoughts on how private equity has shown time and time again to degrade the level of service on many of its portfolio companies? I haven't done enough research on this to really see. I also don't have enough anecdotal experience on companies I've dealt with before and after PE to make strong enough of a conclusion on a more casual level. There might be it makes sense from a business perspective, like cost cutting usually can oftentimes mean lower service quality because you have a lower head count to help pay out the debt of the leveraged buyout. So the rationality